Hello, chat. I was streaming live and it just cut out on me, so I think we got it back now. Good to go. So, welcome to my live trading session. I'm doing futures, trading NQs right now. Shorting this basically because it ran up pretty. I'll tell you why. It ran up pretty hard from this double bottom area here. Hit a double bottom last week on Thursday. Started pushing back up all up into Friday. Hit a key level resistance area here, and I'll show you why I'm looking at this. If you draw your fibs, I like to take a lot of the stuff off the fibs I don't use. It hit smack on a 0.5 on the fib retracement. So it's been rejecting that area, very key level area there. It's resistance, key level resistance was support, now it's resistance. So I've been watching this. I've been very patient. I like to trade the 4-hour time frame. I do go down to lower levels at some point to maybe the 30, 15 minute. But right now, especially on the weekends, I like to trade big ranges, mostly on everything that I trade. I don't like to waste my time entering a trade that's going to be a short ratio, a profit ratio like one. I like 1-to-1s. I don't trade 1-to-2s. Okay, but I really like 1-to-3s, 1-to-4s, 1-to-5s to look for big trades. Like this trade here is a big trade from the double bottom area all the way up. Great trade there. And now I'm bringing it back down again. I'm looking at a target area of 21,426s, right around this area here. Back there is what I'm looking for to trade. Take some profits. If I get down to probably like 2150s, I'll probably start taking some contracts off. But typically what I like to do is move my stop. Like you see my stop is beyond my entry point. So I like to move my stop into profit. Because this way, here, moving my stop into profit. So I'll probably try to take a profit around. See, I'll start looking around here. But if I can move my stop all the way down to my actual target, that's awesome. That's how I like to trade. That way I protect my investment. Also, I'll protect some of the profits that I'm making as the trade starts going on. So I'm going to post a video. It should be coming up soon. Just how I'm looking at the market overall, how I'm looking at next week, how I'm looking at the following week. We got a lot of data coming out. CPI comes out in 2 weeks, PPI in 2 weeks. Data coming out this week is pivotal because we have the unemployment numbers, and unemployment rate comes out on Friday. The bond market has not been showing good signs lately. So let this trade ride. I can show you the 10-year has not been showing. This is the Fed rate cut. So when you cut rates, the expectation is for, interest rates to come down. They cut rates and these yields are running up. I mean, even the mortgage rates are running up. And nobody wants a 7%, 8% mortgage rate. And so the rates have been going up because the yields have been going up, which means the bonds is inverse to bonds. The bonds have been going down. The problem with this whole market is that, in my opinion, selling bonds, like Yellen's been selling bond, every bond she can get, her short-term bonds, long-term, she's been selling bonds like crazy. What that does is counter what the Fed's doing, because selling those bonds actually increases inflation, right? It brings things up. It sucks up and dries up the money supply for the banks. And so your prices go up. But doing that, I mean, everything was about the market. So you got to think about being inside of an election year as well. Being in an election year, of course, you want the market to be up. You don't want the market to be down. So looking at the 10-year, 30-year, these are all at key levels right now. If these things start breaking this, if it breaks this level and uses this as support, we're talking about going to 5% on the 30-year. You're talking about your mortgage rates going up. And it's just not showing that we have a strong economy. The bond market is worried about something. Maybe they're worried about what I think is that the Fed cut rates too early, too soon, too much. They should have held on because inflation was not stomped out. And so the market didn't correct it. If the market would have corrected, it would have caused some pain on, that should have been there to bring inflation down a lot faster, but the market just kept going. I mean, look at the SPY here. SPY is this out. The SPY has just been on a tear, right? This is COVID. All of this right here, this area is COVID. That's COVID. Why? So why did, and I'll talk about this in my video that's coming out. Why did this been running up ever since? But why? Well, the Fed dropped rates to zero. When you drop rates to zero, everybody jumped in the market. It's been going ever since. But they knew dropping rates to zero. I'm gonna check back on the trade here. Dropping rates to zero, doing good, doing good. Let's move my stop a little bit. Too close, right there. Go. So they knew it was going to cause inflation. Inflation just didn't come out of nowhere, right? It's we drop rates to zero, people buying everything. Now we don't have enough supply for the demand, causing inflation, right? So now they're trying to stomp it out. It's just not working. They're saying it's stomped out, but the bond market is saying something completely different. You and I know. I mean, I go to the grocery store, I see prices. I mean, I can afford it. I'm not worried about it, but I still do. Well, I don't want to pay that kind of money for eggs or chicken and steak and all the stuff I like to eat. I don't want to get robbed, and I can tell. And stuff, the gas is still high. Everything is just still sky high. Plus the money supply is drying up. You're getting a lot of layoffs coming, companies going bankrupt. And I'm not trying to be Debbie Downer here. I'm just bringing in reality. I would love to talk about how justifiably so the market should be up as high as it is on certain equities, like especially like Apple. I don't know why Apple is up at the level it's at when it hasn't done anything, right? It's just there's a gap it needs to fill down here too that I marked. This gap needs to be filled down here 172 180s. This thing has just been on a tear. Now it's starting to curl over a little bit, so we'll see if it pumps back up. So the main thing is equity here. I gotta stop, so I'm not worried about it. The main thing to think about here is that when you start looking at mortgage rates and how things were going in the recent recessions and stuff like that, you start to wonder what's going to happen. I mean, this thing is starting now, the 30 years still going up. We don't want to break this level and go higher. That's just not good for the economy. But anyway, that was my 2 cents. I got a whole video on that. You guys can check it out. It'll be up tonight. And he says, my target is 2142, 421, 422. Down this level, I'm still looking at the mediums at the halfway point at 21445. You get that down. And then I want to see, or take out my stop, one or the other. Either way, I'm walking away with some decent profit here. Either way. But ultimately, I want to see this come down. This is a lot of energy moving this up here. Hitting the 0.5 on the fib. I'm expecting a retrace, some kind of a pull down, maybe pull down here and then push out to go higher. But I think all of that depends on the data coming out this week from the Fed that they're going to present. The economic data, we have a lot coming out here. So once we get some of that out the way, I think, if it's bad, if it's good, again, I don't know. I talk about the 800,000 jobs that were revised way later. There's been a lot of revisions after the print. So we get a CPI print and a PPI print the following week. I don't believe any of the numbers that come out because they're always revising them down. Same situation with these job numbers that come out. I mean, they're always revising them down later. So we'll see. We'll see what happens. We'll see what happens this week. But I think the market, in my opinion, pumped all the way up here. We hit a great pivotal point in the market. And what I'm looking for now is some pullback, maybe some consolidation, right, in this area between 21. This is the top of the range, I think, right now, 21,500s down to 21,400s. I think we consolidate until we start getting that data out, and then it'll pick a direction if it wants to go down, if it wants to go up. If the data is good, it goes up. If the data is bad, it goes down. But for the most part, because all of this money was made and all this push up from this double bottom area here pushed up, I think I'm looking at a retracement hit the 0.5 perfectly on the fib retracement. So I'm looking for some profit taking down to at least 2447, 2445. Ultimately, I would like to get it down here to 21,422 instead of 21,455. So I'm gonna ride this down. I don't think this is going up any higher right now, especially with this key level. There's a lot of resistance here, a lot. And then also with the data waiting to come out, I think the market plus all of the push up, the bullishness from the bounce from the double bottom here, I say we pull back maybe to this level here, 445, maybe even lower, and then move back up, kind of just bounce around in this area Monday, Tuesday, Wednesday, or until Wednesday starts real estate data starts coming out. But right now, that's what I'm trading. This is what I'm doing, and this is why I took this short here, why I went long here, and kind of walked this up. Right, got out around here around 21,209s Friday, and then got back in and rolled this back up. I didn't think it was going to break the 21,3/8. It did break up. So I'm not sure exactly what's going on here. Stop got taken out. Cool. I'm gonna leave it. We'll see if it goes up a little higher. I might go back in. I wanted to push up higher than where my stop went out at, and then maybe I'll come back into it again. Yeah, that's how I trade. I trade in big ranges, 4-hour time chart. I don't like trading little ranges. I like trading big ranges. Seem to be holding support right here, right in this area. Holding support. Let's see. I like to mark my supports as green. I'm trading intraday on my trading day. Holding that as support right now. Let's see how high up this pushes. If it rejects this level here at 21,533, and my crosshairs on. I may just short this. I'm going to push up a little bit higher. Go down to the 15-minute chart, see what we see. Not there anymore. Yeah, it's consolidating down here at the bottom of that. Pull here, gapped up, pull down. It's rejecting this level hard. Let's see if we push up. It's trying to hold a base here. Pull up my book map. See where the liquidity is, where buyers. I like book back. You don't have to use it, but I like to use it, especially with futures. I can see a lot of where money's sitting at. See if we push up to 21,520s, 515s here, 520. Let's see if we get 520s. What I'm looking for, what I want to see is a break below this level. If we can break below this level, then I can start getting my target area 21,442s. See if see how it's pushing up. Yeah, it's a lot of momentum to the upside. There's a wall. There's some sellers up here. Really that strong. A couple of them 5988. Wait a minute, I'm on the wrong. Yes, my bad. Yeah, there's a wall up here, 21517. We're getting there. I figured it's going to push up. Uh-oh. Okay. One thing there. Sorry about that, folks. Back. Got a sell order ready. See if it triggers. 21515. Wall right there. Up here. Get filled. Moving up. There is a serious wall up there. Boom. Should be coming. Come on, come on, come on. 21517 is a good wall area. I'm willing to risk an entry at 21515 to get to 217 and then probably add to it. Hold it there. Stop above. Whatever red line is at. Something else I'm seeing too. Could be forming this right there. Yeah, it is a serious wall there. I think what I'm gonna do, move this down. Go ahead there. There's a serious wall. All right, I'm in a trade now. Stop up here. Eyeball my stop right now. I'm just gonna watch. I'm in profit from the first trade before it took out my stop, so I'm doing pretty good right now. Trying to curl up here. Up to my 4-hour chart. Looking. Yeah, it's trying to hold this level. I think this is going to fail. It would need to break above. It would need to break above this level here, 21535. And then it needs to break above this level here and like to a confirmed break above this. It's rejecting it right now, 21512. Or 2154. See if this goes up. Now there's a trend line forming. Let's see if it rejects this one and come down. If it breaks above this, it could go up and test this line here, 21533, and go higher. So I'm gonna stream every Sunday. It's going to stream around this time. Some strong momentum, but there's definitely some sellers sitting at that line right there at that 21515, 21515, 21517 area. And honestly, that's it. It doesn't take much to, like, I'm up almost 1800 right now, about 1800. So I'm not too concerned about. I'm pretty much done for the day. I don't like to trade all day, all night, but I am looking for my profit targets to hit. I could set a stop, and I could walk away, which I most likely will end up doing, and enjoy the rest of my evening. So as a point of wisdom, it's not to sit in front of a computer trading all day, all night. You can make your profits, hit your targets early, 5 minutes, 10 minutes, 15 minutes, within that time frame, or much longer. I'm just saying you can make it in 5 minutes. I've done it. Make it in 3 minutes, depending on how the market moves. If you're patient and you make the right entries, but you don't want to sit. The goal of trading for me is not to sit in front of a computer all day long trading. It's for freedom. Like, if you want to be free, yes, trading can provide that for you. But risk management, patience, quality of life is what you should be if you're looking for that. Don't be that trader who's in front of the screen all day long, just being greedy, trying to get money, because you end up losing a lot of money that way also. If you already made money, how many times have you know people or yourself who you've been up and then you give it all back because you stayed too long? It's like going to the casino and you get up and you stay there, you still throwing the dice on the table, and you end up losing it all. Take profits, walk away. Take profit. That's how you consult. That's how you consistently build, right? You take profits, move on. I make $2,000 a day. I'll make 10 grand, or I'm not trying to get 50. I'll take the 10 and walk away, hit my target, I'm out. The next day I might get 5. The next day I might get 20. I take it, I leave. I got the whole rest of my day to do what I need to do. Sometimes you can make enough money that makes your profit target for the whole entire week. And I know you guys have been there. But you thinking it's more, or you can get more, and not sticking to your strategy, not sticking to your trade plan. That's where you start blowing up your accounts. At SixFourTrading, we teach you how not to blow up your account, how to focus on risk management, trader psychology. These are things that we describe and talk about in SixFourTrading because it's important. Those things are keys to success. And you have emotions. Everybody has emotions. Don't listen to traders and people tell you about, oh, you shouldn't trade on your emotions. No, you shouldn't execute trades on your emotions, but it's not for you. It's not to say that your emotions are wrong. You're a human being. Your emotions are right. You feel anxious, you feel excited, you feel sad. Those are your feelings. If you acknowledge them, then you can control how you behave to those feelings. If I feel frustrated today, it could affect my trading. I may not want to trade until I figure that part out, because I'm already frustrated before I sat down at the computer and started trading with real money. Now, once you start knowing that and start growing, and you start muscle memory on, okay, I feel anxious today, I feel frustrated today, I feel great today, but then you start telling you none of that matters how I feel. I have a trade plan in front of me that has my risk management plan, my setups, everything is there. I stick to my trade plan no matter what. I don't care how I feel. I acknowledge it, write it down, and then I execute my trades, and then I stick to that plan. So it's consistent. And if that trade plan I have set up for me is profitable, like when I execute it and the profitability is up 60% or 70% profitability, I'm sticking to that because that plan is consistent. I may be a hot mess over here, you know, whatever happened that day. I'm a pretty calm person. And but I don't care. I don't know. I don't let whatever I'm feeling or whatever I'm going through does not affect my trading because I've been doing this a long time. And even if you've done it a short time, you can get to that point too. Just stick to your trade plan. And if your trade plan isn't making you if it's not profitable, then reevaluate that plan. All right. We all have to look through our plans. It's not, okay, this is the plan, this is it forever. It could be, but the market changes and you change and you evolve. There's always a way to improve it without changing it. But it's just some little tidbits I like to call. It's little tidbits, little keys to, like, you know, being successful or, you know, having a trade plan. It's all about the plan. It's not about FOMO, right? If you see the market running in a direction, you don't want to jump on that bandwagon. Yes, the trend is your friend, but you have to make sure it fits your trade plan. What's the entry point? Is it already gone up, right? And then you go with it, and it comes back down because most of the energy is already gone in it already. So then it pulls back. You want to be able to trade in a way always that fits your plan, even if something is running like when GME and AMC ran. You know, people jumped in at the high points. I know people were buying it at $300 a share, at $200 a share, and holding it. Right when it went up further, I'm like, you're buying, like, that thing jumped up 100, 200, 300 points, and they're buying it at the highs, and they lost a lot. They lost a lot of money. They lost a lot, more than money, because people started putting their houses up just to get in there. It was crazy. But if you knew how to trade, if you know your trade plan and not FOMO, you can make money, and you can be consistently profitable, and you cannot blow up your account. Are we looking at NQs here? Yeah, this is definitely resisting that area at that 21,515s through 517s. That trend line seems to be starting to build and form there. I'm going to change the color of this so we know what that is. Trend line is starting to change. I like red for resistance, so I'm gonna have to make it bigger. Ah, yeah, that thing is really showing up. Down here is going to be, I'm gonna take that out. Target point, change this to green anyway because it's technically support. I don't need it. There we go. So what I'm looking for, Hank's looking for, this is definitely formed a trend line here. So I wanted to stay underneath this, reject, and break through this zone here, so I can get profits down here at least 2145, 445s down to 21,420s. That's what I'm looking for as a overall target on this. And now identify the upper trend line, downtrend line that is respecting at this point. That's it. This is looking pretty good right now. Pretty good. We get these targets. It's probably gonna take a while. I like this is a 15-minute chart, but I'm trading in big ranges. Like, I'll go back to the 4-hour chart, see how I have it marked up. Here, I'm looking for here on this. I wanted to break this low first in this green area that is using as support right now. Come down, take that out, then we're going to be in business. Get me to that 21,445, 21,435s, 21,43s area, and we'll be rocking out. Let's see what the 10-year is doing. Yeah, the 10-year is starting to go up. See what gold's doing actually, because gold. Let me show you what gold did. So gold's been in this little wedge, and it broke this trend line twice, right? It broke out, got knocked back down, broke out. So now I'm watching gold. I'm gonna see if it can break this top here, 2167s, 667s. Sorry, yeah, 2667s, 2670s, and then if it can break up, then I'm looking at some key level resistance here around this zone. Red. If we can break up above here. Yeah, 10-year and 30-year, like I was saying earlier on the other video, is that if this thing breaks up above, it's not going to be good for the markets. I mean, it's already shouldn't be good for the markets, but I don't know what the markets are doing. Interest yields should not be flying up like this when interest rates got cut. So the bond market is definitely seeing something. We already got a little gap up. I mean, if this thing breaks. I wonder what Bitcoin. Look, let's go take a sneak peek at Bitcoin. That thing. 98,000 right now. Let's analyze it real quick. Again, one of my strategies, trend line breaks, man. All day. Get a trend. If you can identify a trend line, you can see it break, you get this move. Gone. Now, so Bitcoin's in consolidation right here. That's consolidation. It tried to break out. It hit this 108,000. Amazing. This is on a day chart. So that's a shooting star pattern right there. Not there. So let's undo that. Right here. Confirmation. And the way that works, what I look for is, where's my little line? Here we go. This right here. Once it broke this neckline, not that one. Where like my tools are like always in front of my face, and then they just magic all day how they just disappear on me. Anyway, oh, I know why. Go back to crosshairs. This right here, you got these upper wicks up here. That is, sellers sitting up here saying, no, that's it. And they took control, basically. And then you got right here, once it broke this level at 105,393, this red candle broke through. It was you could have caught all of that downside on that. Now we're just consolidating. We're pushing back up here on Bitcoin. So what I'm looking for is a break above the top of this consolidation zone. Like, so basically 100,280. You break above there. And then your next level you're looking at is 778s, 102,778s, to maybe start making a run and go test out this high again. But the failure point, you have to always know both sides of the trade. Let me go see what's going on. Yep, we're doing good. Both sides of the trade is this. If this goes down to, if it breaks out of this consolidation area to the downside, you have to watch out for that. You probably gonna need more room on this in case it doesn't break out here. It just kind of just chops around like it's been doing. Right. Then you start looking at levels. The next level is 87,500s, and if that breaks, you're looking at probably 7,600s. And the thing about Bitcoin moves fast. I mean, it can move. You can lose a 10,000 to 20,000 on Bitcoin in a day. But this trend line break was beautiful. I mean, it just got up here and it just look at this big move it did in like what, 3 days, 20,000, almost a week, less than a week. Amazing. Yeah, Bitcoin's looking good. Hold, still holding. Back to my views here, making these profits. Profits are climbing. I'm over 2,000 already. Probably more. Yep, more. We got my target. I was looking at this as a rejection zone. This needs to come down, take this level out here, come down and get my target at 21,420s, 4,200s, and I'll be done. This probably won't happen until maybe tomorrow, like early in the morning, but we'll see how fast it moves overnight. So it's going to trickle. I'll throw my stop above and just throw my stop at, let's see where I'm at right now. I'll put a stop here, profit, and then I will trade this down. Right now I'm just eyeballing a little bit. Fine. Right now I'm still holding the rejection area up here. So I went short here at this line. Rejection area up here. I would have preferred this pattern though. This would have been nice right here. I was looking for. Got a green candle right in that zone. Got a red candle rejection. A gap down, sell off would have been nice. But we may still get, got some upper wicks here. If this creates, this is already creating a problem for upside. We need to break this low here on from Friday. 21,493s. Starting to move down here a little bit. It's just chopping around right now. Give me a big red candle there, and I will be done for the week. But that's it. That's how I trade. That's how I trade futures. I trade in general. Support, resistance lines, I have them all drawn out within the area. I don't draw a whole bunch of them. Look at my charts. They're not below all the way up there. I kind of stay within this area. Actually, this is probably too much for me. But the reason why I'm doing it is because the market moved in big ranges, right? This is a big move. This is a big move, big move, big move. So I'm tracking these moves out, especially when it starts getting to economic data coming out. You can get really big moves off of that alone. So I'm just drawing these out. So I had a trend line coming down here, and I was tracking this one. Once it broke out, well, it dropped down to create another one here, 4-hour chart. So I was watching this breakout. So okay, broke out, went long. I was long down here because of the double bottom area, right? Took some profits up here, got back in once it broke. Told you got out here, so it broke this. I got back in. Kind of been riding this up. This was a tricky day here. Took profits kind of early, which is fine because I didn't want to trade. This was messy. But still the push up, I said, you know what, let me just wait and be patient, wait for it to hit one of these key level zones there that I have here. And it did, right? It closed here, rejected. I took some I actually shorted this down and got some profits. Once after my long, I switched back short. Took profits on this because it hit a key level area at the 0.58 on the fib, and a key level just support in general. I'm sorry, resistance zone in general. Made good profits off of that. Now I'm shorting it again because this is a lot of profits that I think needs to come down, considering the fact that we don't have the data yet from the economic information that should be coming out this week, and it's still key level resistance. So I'm gonna react to key level resistance and support every time I see it in big zone areas. That's what I got here. So that's it, folks. Hope you enjoyed the stream. Please like and subscribe. We'll be doing this way more often. I'm back in the saddle. I've been absent for a while. Had some family things going on, but you know, back in it. Like, subscribe, and I will see you all next time.